All right, guys, today is my rant day. I've been seeing a lot of financial experts come out and pretty much tell you guys that it is dumb to own an owner-occupied house. And I always talk to you guys about all the reasons why I think that you should own aside from the financial benefits, but I don't go into the financial part very often. And today I'm going to do that. I was actually watching a Joe Rogan podcast where his guest, Caleb Hammer, went on there and just told you flat out, like, from a pure investment standpoint, it is dumb to own a house. He goes on to say, math is math, and F your feelings about the way that you feel about it. So I wanted to give you guys the counter argument. One, I think he's just flat out wrong. And I also think it's a really dumb way to compare a piece of paper versus an actual hard asset when you're just looking solely at appreciation rates. So I want to give you guys kind of a list of things that you might not have thought about as a homeowner that you could do with your property that's completely different than a stock. The first is, a lot of people don't realize that you're exempt from capital gains. This is huge, right? If I go and make $100,000 in the stock market and I sell my stock, I'm going to get taxed on it. In real estate, you have an exemption. For a married couple, you're exempt up to $500,000 of profit. That's huge on taxes, okay? Also, every single year, you have a benefit from your interest that you pay on your mortgage as a tax write-off. With a home, you have flexibility. If I got myself in financial trouble, I could rent a bedroom out. I can run a small business out of my house. There's so many things that you can do. With a house, you can expand the house by doing the ADU, and you could create instant wealth just from doing an add-on. You have the flexibility to borrow against your asset without a margin call. If I try to play this game in the stock market and the stock goes down, my money gets called. In real estate, if I go and borrow and we have a 2008 event, no one just takes your money from you. You still have the asset and you can wait for it to recover. I can also borrow to leverage to go and buy another investment, so I can expand my net worth. One of the most important things, and I've talked to you guys about this a million times, is that a house is an inflation hedge. We know rent goes up every single year, but we get to fix the cost with owning a home. I'm sure there's financial gurus out there that could probably hit on a million more things that I missed, but just even this list alone gets you to realize that a house is not a stock. Like, trying to compare those apples to apples is just dumb. Now, with that being said, if we tried to do that process where we're just looking at it from a sole standpoint of, I put X amount of money into the stock market, I put X amount of money into the real estate, which one's going to yield a better return? Let me show you guys a quick example here. So what I did is I went on AI and I just asked it, can you give me the average rent cost for a $650,000 house in Lake Tapps? And it came up with about $3,500. And then I did the same thing, just I didn't need AI for this, I ran my own math, doing a $650,000 payment with 5% down. And the payment's about $4,500. But you got to remember that a portion of that goes to principal every single month. So about 500 of that in the early years of your mortgage goes to principal. So in all reality, it's about $500 more a month to own a house than it is to rent. So if you took that $500 savings and you took the 5% down payment and you put it into the S&P and you actually got the 10% yield, at the end of the year, you would make $3,850. So $3,850 would be your actual return. Now, if we did the same math with the house and we take the $32,500 that you put in for your down payment and that $650,000 asset appreciated at 5%, your return is $32,500. That means on real estate, you make a 100% return. On the stocks, you make a 10% return. So if we're just looking at it from that basic math, it's pretty simple to see like how big of return you can get. And that's the reason homeowners are 44 times more wealthy than the average renter. So again, I can go on this forever, and all of the naysayers would be like, oh, what about property taxes? And what about the maintenance that you have to do? And what about this? And what about that? Well, the original list I gave you far supersedes any of the negatives with all the flexibility that you have for home ownership. So anyways, that's my rant for today, guys. I hope you're able to stay tuned in it. I know it's a little bit longer of a video, but I think there's some real nuggets in there.